The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? So welcome to a happy Monday, a new week. Continuing on the summer doldrum there. We got a little bit of a drop down in the markets, but nothing major happening yet. So we will be seeing what's coming out this week. We got the European thing, so we're going to step up a little bit notch this week. We got the Greeks basically asking for a bailout, and, they're doing a bunch of meetings trying to say, hey, can you give us like two more, not really a bailout, I guess an extension on the bailout. And they're basically asking, begging, whatever you want to call it, an extension of 2 to 3 years. I think originally they asked for 3 years. Now they're asking for 2 years to be able to try to meet the austerity requirements. And because Greece basically knows that if they exit the euro, they're just toast. But despite that, a lot of the banks, if you look at the ratings, they're basically putting a 90% probability on Greece exiting the euro within a year. And most of the reports have said people expect it either in the later part of this year or basically winter or spring over here for that to take place. And then the other interesting piece is Finland is just ramping it up even more. They're starting to call it the the Finzict, whatever you want to call it. The Greek exit, so the Grexit. Now you got the Fixit, and that's what it is, the Fixit. So they're looking at pulling out of the euro. They're fed up with paying more bonds. They don't want to be buying these bonds for these bad countries when they've been responsible. And they're one of the countries that actually would have the ability to really step out and doing this actual exit. Because if they do it, here's the reason they can. Because most of their money comes from Denmark and Russia and the USA. And that's where they do most of their exports. So if they step out and it causes some big European crash, it really won't. It will, of course, affect their economy by affecting the economies that they market to, but it won't completely affect their economy directly, as that's not where their business is. So be looking for the Fixit to be a possibility. It's going to be talked about a whole lot more. And just nobody really wants to be first on that whole list of, who's going to cause it to happen. And as an interesting report on, you had the market going on. I had an interesting report that I read that said that basically Germany, as much as they would like to say stop, they basically, with all the bad history they have, of course, from World War II and the Holocaust and everything else, they don't want to be the one that brings down Europe. And so that's one of the biggest reasons that they are trying to figure out how to fix it, whatever it takes, versus get out. And nobody wants to be first. Now, as soon as somebody is first, that's going to make it easier for someone else to join in and some other parties to keep going. So we'll see if that happens, how that rolls out. The big date again, keep reminding y'all, September 12th. That's when the German Supreme Court is going to be ruling on the constitutionality of Germans having to take on all of this extra debt of other countries. And if that gets knocked down, that will be pretty disastrous for Europe. It's going to put them in a very tight position of what are they actually going to be able to do. Because without Germany, there basically is no euro. And all the other countries are pretty small. The ones that aren't small are basically in horrible shape. And another big concern is the whole North versus the South thing. Going on, because they're worried that that's actually what's sort of setting up is you have these countries in the north that have been responsible, they're doing well. You have the ones in the south that have been irresponsible and are not doing so well. So they're worried about basically there being this like the northerners saying, hey, y'all fix it yourselves, and the southerners being left. So that's just an interesting dynamic that's playing out in the market. Let's go ahead and do a quick market wrap for you. And we got the S&P down 1.75 points right now. We got the Russell down 2.5. Got the NASDAQ actually up 2.75. The big leader for the day, right? So 0.10%. And we got the Dow is down 8 points. We got the oils down 30 cents. And we got natural gas up 0.033 there. We got gold is up 260. And we got corn and soybeans pushing on back up again. Corn up 15 points and soybeans up 28 points. And let's look over at the currencies. We got euro dollars, 8 pips, pound dollar up 16, Aussie dollar up 35. I read an interesting story on the euro dollar. The Rothschilds, sort of the inventors of half of this mess that we got ourselves in here globally, and one of the families that's part of that, they actually have taken a massively short position 135 million short position on the euro. So that ought to tell you something. But they've put a ton of the money in their firm short the euro, so they see something coming. And just keep that one in mind too. Another piece of interesting news, just going through all the reports and everything, and seeing things that are coming out. And one of the things they're looking at, this may set up just like an incredible arbitrage opportunity if they're stupid enough to do it, I guess. But one of the things that Draghi is actually Mario's putting out there is he's saying, hey, what we ought to do is cap the interest on some of these countries that are suffering, like Spain and Italy and stuff like that. And so if their interest rates start getting to a certain point, we're going to set a limit, and at that limit, that's when we'll buy bonds. So to drive down the interest rate, basically increase the demand, lower the yield. So if they do that, well, and if they actually set a point, one of two things, either one, some company's going to come in and they're going to, they're not going to join in, but easily what could happen is, you have people going in to sell. So right when you get close to that point, that's your sell point. So it could really make some interesting plays. I'm going to be examining some futures markets overseas and stuff to see what might be an interesting possible setup, and is looking for some good possibilities on shorting Italian bonds, shorting Spanish bonds. If they do pass that, that's definitely going to be one of those trades that you just go in and the country. It's sort of like whenever Switzerland came in and they said, hey, our rate is not going to go below this. USD franc FX rate is not going to go below this, and if it does, we're going to step in. And you know what they did? They stepped in and dropped below to a certain point, and they bought the thing back up. And that's one of those ARB opportunities. When a country says they're going to pour basically tons of cash to make sure something doesn't happen, then anytime it gets close to that point happening, then you know that, hey, that's a great opportunity to join in with the country, sort of a don't fight the Fed. And so that's one to definitely keep your eye on. If you see that story, I'll keep watching that story as it develops. But here in the next 3 or 4 weeks, he's actually supposed to propose a cap where they'll actually buy bonds if the yield gets to a certain point, to keep it to where those countries don't have bonds that they can't afford the yield on. So but definitely, like I said, a great shorting opportunity anytime the broaches gets close to those levels. And I'll be checking that out. I'll keep y'all up to date on it. And just watching everything over the news, but with the euro going down and with Draghi saying that, and Greece right now seeking some sort of extension. I'm sure if they do get an extension, that will provide a little bit of relief to the markets. There's not really a whole lot going on besides expectations that there will be a QE3, and but about 80% of that expectation is probably already priced into the market. Okay, because there's really no other reason the market's been going up. So besides a couple reports that look decent and better than expected earnings. And I find it really funny when you see the better than expected earnings when it's not really good earnings reports. It's sort of you ever go to a movie and you're about to go to the movie and you haven't seen it, but you just have low expectations, right? People have told you it's horrible. Maybe you read the reviews on your phone or something right before you went in. And, it looks interesting to you, but, it's one of those things, I don't have nothing to do. I'm going to go see a movie. This looks sort of interesting. I'll go see it. But, you're thinking B, C, D level, right, movie. And you go in, you have such low expectations that when, it actually is better than what you expected because you had low expectations, you're like, that wasn't such a bad movie. I don't know why people were so hard on that movie. I thought it was halfway decent. It definitely wasn't an Oscar or whatever, but when Academy Awards, nothing like that. There was no huge, great acting, but it was actually a pretty good movie. I'm surprised it's not getting better reviews. And that's sort of what happens when CEOs come out and they say, we really don't think we're going to have a good next quarter. Okay, what they're doing is saying, let's post these bad potential reviews, so when we exceed the expectations of the low expectations we've set, then people are really happy and they buy the stock. So they sell it off, of course, on the bad expectations, but then you get a nice big bump on the next quarter because everybody has low expectations. And that's exactly what this happens. It's like having low expectations for a bad movie and thinking it was better than it really, if you would have went in with your original expectations, you would have thought that was horrible. But since you had low expectations, hey, that wasn't so bad. And that's sort of what's happened with the whole earnings. Also, we have the earnings cycle that just is complete now. And that earnings cycle is where it's a seasonal cycle. And what you're going to do is about a week before earnings, especially a few days before the week before earnings, you'll start seeing a lot of money start flowing in. and all of a sudden the market will start running up, and no earnings have come out. Nothing's happened. Why? Well, because mutual fund managers need to mirror the up performance of the market. Okay? If the market is down 10% and they're only down 5%, nobody cares. Hey, good job. All right? If it's down 10% and they're down 10%, nobody cares. Good job. But if it's up 20% and they're only up 10%, that's not a good job. All right? So it's not about the bad performance. It's about the good performance and not missing out on the good performance. So since that's how they're measured, then what they got to do is they got to load the majority of the available assets in the funds into the market, into those stocks that are coming out with the earnings reports and everything else. And so they load up, and they start loading up just a few days before the big earnings season starts. And then it starts moving up. And then it just sort of chills out. So, and that's what happens. And if it was really bad, it drops down, and it gets obliterated, whatever. But again, it's okay if they have bad performance, as long as the market has bad performance too. So we just really completed that cycle. And you always want to be aware of that cycle. And it's really easy to remember. Okay, it's basically the week before, all right, every quarter. Okay, so and you should really expect, especially the second, third, and fourth quarter. So and that's that's actually part of the contributing factor to what's called the Santa Claus rally. So we'll be talking about that later in the year. And it's just that earnings cycle happening, and it happens to be right around Christmas and all that. But you'll see that right before April. And, you see it again, of course, right before July. And then we'll see it again right before October, usually right at the end there. So a little boost up with no good reason for it except for the fact that they got to mirror the performance of the market. So also, what else did we have going on last week seasonally? Well, we had the payroll cycle happening, right? So where all the money comes out of people's checks, goes into 401ks, that goes into mutual funds, which, of course, goes into stocks. So that was part of that last bump that we saw. And then the other part being the Fed. Everybody has this big expectation of the Fed. Well, if the Fed doesn't come through, then you're going to have this massive deflation of the run-up. You'll probably see at least an 80% sell-off of the recent run-up that we've had take place just in that short period of time. And so now that conveniently happens on the 13th, the day after the German Supreme Court makes their decision. So it's one of those, does the Fed need to come to the rescue of the world by putting in QE3 or not? So they sort of set themselves up, hey, if that's good news, then they can probably stave it off, and that way Bernanke didn't have to be accused of hyperinflation later whenever that happens, and they have to jack interest rates up to 20% to keep everything from overinflating. So he's trying to put responsibility in Congress's hands, but he also wants to make sure that when he does end his term, that he ends it on a positive note, ideally. So that's out there, and he definitely made that play to ensure that it would come in the day after. And we can always pull up, and I'll show you this here whenever I'm looking at reports or what reports to look up, what's coming up. And I'll sort of show you where I find those reports and what to expect. So hold on right there, and we'll come back right after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour here with Darrell Martin. And I just wanted to let y'all know, anytime you want to, you can also listen to us on your mobile phone at TFNN.mobi. And all you got to do is just hop on there, literally, and it'll download. You can play it, and you can even open your other apps. Like if you have an iPhone, you can actually open up your other apps and do other things while you're listening in. And then over here on TFNN.com, one of the things I always want to point out is Nadex accounts. We'll be going over that a little bit today. So make sure you do go over there and click on the Nadex banner. You can get a free demo account, so you can start checking this thing out and seeing what it's all about. And you just click on Nadex, click on Create an Account, and you'll scroll down here, and you can open a live account. It's only $100 to fund a live account. You can start day trading gold, forex, copper, silver, the NASDAQ. You can trade the S&P 500, the Russell, oil, natural gas, all sorts of products. Only $100 in your account. You can actually do quite a few trades with that. So quick start, or to get a test drive account, free account, $25,000 of funny money. Best way to learn, really. Cheapest way to learn, right? Is go in here and just teach, just to learn the mechanics of how it works and follow along in the trades, things like that. You go over here, you go to demo, and you enter your username, first name, last name, phone number, email address, and click apply for demo. Instantly, they're going to send you an email with your password in it, and all you need to do is, as soon as you get that email, click over here on login, and then enter your username under the demo section, or in the live if you open a live account, and go to demo, password, click login, and you'll be right into your account, and you can actually start trading Nadex and seeing how the binaries and the spreads work. And so I just want to make sure I point that out so y'all know how to access that. And then if you have any questions, go ahead and give me a call right now. You can call me at 877-927-6927. 877-927-6648. Again, that's 877-927-6648. Or the international line, you can call in 727-445-1044. Again, that's 727-445-1044. Awesome. So let's go ahead and check out what's going on in the markets. Everything, not a whole lot has changed, of course, since the last time we were on there. But one thing that we were going over is just looking up, some of the things like the euro and finding out how do you look up things like when announcements are coming out. And I'm going to be adding a tool to our site soon that you'll be able to access that'll have this on it. But you can go here and go to Calendar on Forex Factory, and you have all the stuff in here. So if we jump forward, you can see right here on the 31st, we're going to have the Jackson Hole Symposium. So an actual start, I guess, on the 30th, and be going, and then we kick off, full throttle. But be right there, day one on the 30th and 31st. Everybody's going to be listening for every sound bite they can get on that. So that'll be the 30th, 31st. That's going to be the big piece in the Fed. And, of course, what do we got coming up, this week? So if you go right over here, and let's go on down to the 22nd. And we're going to have the FOMC meeting minutes. So they're going to see, are there any clues to them saying, hey, it's a bad economy. Inflation is under control. Unemployment is not doing well. Well, those are all signs to put those together for potential QE. So they're going to be scouring through that, and that's going to be coming out, coming up here at 2 o'clock Eastern, 1 o'clock Eastern on Wednesday, or 1 o'clock Central on Wednesday. And if you go on over a little bit further over here to September, then what you're going to see is on the 12th, I don't even know if they're going to put it, yeah, there we go, German Constitutional Court ruling. They actually have it on here now. That's pretty cool. And let's see what they have. Basically, the German Federal Constitutional Court is due to announce a ruling regarding the constitutionality of the European Stability Mechanism, or the EMS. Basically, it's a license to print unlimited money, sort of like the Fed, and for Europe. So they can print. They don't have to, go through the whole bond approval process, all this stuff. And now, even if they rule it constitutional, that's going to be huge because obviously they're the biggest piece of that. But other dissenters can exist, such as Finland. Well, let's say Finland doesn't like the idea of giving up all this power and control and having to submit all their budgets to the EMS. So if they go in and they do that, then that could be where you see, the fix-it. So that's where Finland may exit at that point. So, anytime, somebody, basically there's a high expectation that somebody's leaving the euro in the next 12 months, and basically the last half of those 12 months. Like I said, December, spring, and it's either going to be Finland or Greece. And if they want to save the euro, then it's probably going to be Finland. But we'll see how that goes. But again, right after that, really convenient, on the 13th, we're going to have the FOMC federal funds rate, the statement, the press conference. So basically just a whole fun Fed funds day. And since this week, we do have the Fed funds minutes coming out, and everybody is really, pins and needles on what is going to be in that report, and are there going to be any clues to whether or not they actually may do, any kind of QE here in the next couple weeks. Then that's going to give us a lot of flat, basically you ought to be looking forward to a very flat market until then. So we may have a little bit of a move here or there. There's no big reports. You got Lockhart speaking. That's not going to be a massive thing right there unless he, reveals something, which I doubt. And then, that morning we'll have existing home sales. But so once that report's over, let's just say 10:15, 10:30 Eastern time there, then expect a flat market. And that's your binary trading time right there between 10:30 and 2. You can go in and just sell premium, for the next couple hours and just collect it. Because you should not expect a lot of movement between that time period. But hold right there, folks, and we'll be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of tfnn.com.
All right, folks, welcome back to the Diagnostic Trading Hour here. Your host, Darrell Martin. If you have any questions, give me a call, 877-927-6648. And market wrap, we are looking at the market here, and the S&P is just down a couple points now. And so, you know, it's just oscillating up and down. We got the Russell down 2.9. We got the NASDAQ up 0.75. So they're all sort of pulling off that. And it looks like we may get our, lunchtime lull may turn into an actual sell-off. And we'll see how that goes. We'll keep you posted on that. And saw some interesting information over here in the Tiger's Den. Thought I'd share it with you and let you know what's going on. Definitely, if you haven't checked out the Tiger's Den, you want to check it out. You actually can see all the charts, things that are coming up. You can ask questions. It's a great place for traders. So check that out on tfnn.com if you haven't already checked it out. And, just hop on there, become a member, and then you can upgrade and add that in. But one of the things they were talking about was Apple, and there's a lot of things, of course, going on with Apple. We talked about it last week. One of our callers basically said, hey, what do you think about Apple? And I was like, well, on this day, I'm bearish, but overall, I'm actually bullish. And I have basically a bullish outlook on Apple at that time. And technically, I had a bullish outlook. Some other reasons. I had a bullish outlook fundamentally. I had, just all the announcements that are coming out here, and basically on September 12th, they expect to have some big conference announcements. We'll see, if they hit that deadline and they do all the stuff. But they're supposed to be, talking about how they are going to make a smaller pad, and Apple TV is the big anticipated thing because everybody's battling for control of the living room, and so they want to get in on that market and how they're going to do that. Their last Apple TV was a flop, but I think now with all the other things that are out there, and what they have with iTunes being so big and everything else. They're looking at going for that, and then they also are looking at making finally releasing a 4G iPhone. It's sort of funny. I actually have an iPhone 4, and it says 4G on it, and I just did an update one day and it said 4G, and it was really interesting. I'm like, and I actually sent it to one of my friends, and I was on my Wi-Fi network, and so I did like a speed test, and he was all jealous and upset and everything else, and figured out really quick. I knew it, but I just wanted to mess with him. And I'm like, man, you should have stayed with AT&T, and not that I am favored to AT&T at all. But anyway, so yeah, they updated it just to say 4G, just because it's at 4G speeds, apparently. I don't think I would necessarily vouch for that being true, but they're going to release a true 4G iPhone. That's the expectation, and also a little larger screen on the phone as well. So those are some things that are coming up with Apple. So that's the fundamental reasons. And then seasonally, there is an expectation just on the dividends, the earnings cycle and the dividends. They're actually finally offering a dividend, and they've done that. And so now that they have their dividends out there, there's a lot of hedge funds that can hop in and buy in. And a lot of people that, love Apple think Apple's great, Apple's awesome. They're going to like it twice as much now, and because they get that big dividend. So, I mean, that came out, I don't know, that, it's not new news. It came out, I want to say 10 days ago, when they actually paid out the dividend. And, but, it's one of those things that definitely did give it a favor, because a lot of, hedge funds, mutual funds that are dividend-yielding funds can only buy stocks that yield dividends. So once Apple announced that it was going to do that, that put a big, bonus in its favor for being able to, really start moving up from that, big drop-off it had, and put things, I think, in the right position for it to keep growing. And it's just been, it's great. I mean, you want to see any company in the country that you can succeed. And, I have a Mac. I don't think I really even know how to use it. My daughter knows how to use it pretty well. But, I do have an iPhone. I have an iPad. I probably use my Kindle Fire more. And maybe that's why they're going to the smaller pad. Because on the Kindle Fire, it's easy. You can hold it in the palm of your hand, one hand, easily, okay? And you can just surf, navigate, do things. I mean, you're not going to work on it, but I'm not going to work on my iPad either. I'm going to work on my computer or my laptop. And so, I think Kindle got that piece right. And but it's not super fast, it's not as accurate on the buttons and everything like the iPad is. And so if they can come out with a version that people actually want to hold in their hand and make it more reasonably priced to compete with the smaller tablets, then they could dominate that industry. And so if they do that, I think that'll be a huge move for them to make things happen in their favor. So they've been pretty aggressive about taking over everything they can, and so we'll see how that goes. And with all the rulings, and Samsung had their stuff with them, and now that Google's buying them up, there's going to be a whole new file of lawsuits and everything else. But at the end of the day, Apple made a lot of this stuff, and they're just trying to claim their rights to it. And poor Apple, man, they just starting off with Bill Gates, man. They just people just keep taking their great ideas. But I guess that's the corporate business world. So you just got to keep outpacing everybody else. Microsoft's going to be having Microsoft 8 coming out in October. They're only going to charge $40 for the program, and they're going to obviously be putting it on everything, and it's going to make everything compatible between Windows phones and Xboxes. And we have an Xbox and a PS3 in our living room. I think I've used the PS3 24 times ever in a couple of years. The Xbox we use all the time, so not so much for video games. I have them. I haven't played them that much, but really just all the apps that are on there. And like Netflix and everything else, and the recording stuff that it has. There's just a lot of cool features to it. The Kinect, my daughter plays with all the time on there. But tie that to your computer, and they've been really trying to tie everything to the computer. And so they're basically trying to make that Xbox that home station. And I think that's a good and bad idea. It's sort of an expensive home station. So think about how well they can pull that off. And that's the whole idea of Windows 8, is to sort of complete that phase of tying the phone to the living room to the computer. And it's going to be a very app-based touch. Like everything will be touchscreen-based, and my daughter will be happy. So she's 5 years old, and most of the computers, like downstairs, all the tablets, the phones, of course, they're all touchscreen. And so she's used to when she goes down to the computer downstairs, except for the Mac, but the other PC that we have, touchscreen. She'll go in and she does everything. With sometimes barely ever used a mouse. I remember the first time she saw a mouse, and this is how much she had used tablets and stuff before that. She actually said, "What is this device?" She's like, "What is this thing?" I'm like, "It's a mouse." She's like, "Oh, is that something that y'all used to use on computers?" I'm like, "No, we still do use it." To her, it was a completely, archaic, like just outdated device. And So anyway, so Windows is trying to make that this norm. And a lot of schools now are using pads and, using tablets and things like that. I know one of the schools that we're, working with and everything else, they actually have kindergarten up through 8th grade gets an iPad, every single student. And every student from 9th to 12th grade actually gets a laptop, iMac, and, laptop. And so, Apple's pushing that way. Windows is pushing this way. Windows trying to get everything together. So we'll see if they're able to pull it off and make a comeback. But they're trying to do more of an app-based computer. And you're going to have to relearn how you use your computer, I'm sure, because it's not going to be anything like anything that you used before. But it's supposed to boot up really fast. And supposedly they've solved a lot of issues. They say that every time. Windows 8, I think, or Windows 7 is probably the best version they've come out with. So it'll be interesting to see how that affects their earnings reports when they get that going. And again, that's coming out in October, and you can get developers copies for free right now. But the full version, the unbugged version, that doesn't have the bugs that developers are figuring out right now, will be coming out pretty soon. And but just all sorts of interesting things going on, and companies trying to be on top of their game and make things happen. So we're just going to have to sort of see where that takes us in the markets, and if these CEOs that seem to constantly be under fire for making so much money can hop out there and just keep doing their thing, keep making money, and create more jobs. So we can put America and everybody back to work. And we got the elections coming up, and that's just interesting, the whole Medicare debate. And so, basically if Romney wins, short healthcare stocks, okay? And not an actual recommendation, I guess, but, definitely the companies that are going to be making a lot of money on the Obamacare plan, those would be the ones to short, because all that expectations being built in will go away. And, one of the cool things, I just read this today, and, whatever candidate you're for, whatever, I mean, that's one of the great things about, our country is you choose. But one of the cool things I read about the tax plan that Romney and Ryan have, and not that I think everything they have is great, but one of the great things that I thought was pretty cool is people making under $200,000 a year will not pay capital gains or dividend taxes. So I think that's a massive boost to the market. That's great for retirees. So when they're pulling money out on capital gains, out of their IRAs, things like that, making that coupon money, that dividend money, and everything else. And so I think that's a great idea, and sort of favoring people, helping them out on making money on capital gains. That won't help us as traders so much, but it'll definitely help them. And we do have the 60-40 rule, so that'll be really interesting to see how that goes into effect in the futures. There's no money on capital gains, so that could actually lower the tax rates, and that'll be a whole different tax question that'll come out of that if we don't have that. So, anyways, going back over to Nadex, I got an email, and one of our viewers was asking, basically, they said, can you go over the hedge strategy again? And so what I wanted to do is take a moment and to sort of, retrace the steps on that strategy and show you how it works and pull it up. So we're going to do that and make that sort of the last big focus of our segment today. Again, if you do have any questions, just give us a call. Number right there, always on TFNN.com, 877-927-6648, or outside, call it 727-445-1044. And logging in right now to my Nadex account, so I can show you how the hedge strategy works. And anytime you got questions, definitely give us a call, or you can also email me, and that's dmartin@tfnn.com, and I'll be happy to reply. And either I'll reply an email or I'll take your question on air. But want to help you out any way that I can. And let's see here. So one of the things interesting, whenever you first log in, that you'll notice is you'll get a welcome message right here, and like it says, hey, crude oil future symbol is rolling over today. So make sure that you're looking at the right chart. And I think, there it is. Okay, so yeah, make sure you're looking at the right chart. And so what it's telling you right there is effective August 20th, the crude oil contract is going to be based on October. So you want to be making sure you're looking at the October chart, or you're going to be really confused when you do your trades, because the difference, can definitely be there. And let me show you how that difference can be there. And I'll pull it up. And let me grab a chart. It's easiest to do this over on the Thinkorswim platform. And I'll zoom in on that. And we'll go in, and I'm going to pull up crude oil. And let's see what contract it has on the screens. Yeah, see, they're showing September. So if you don't know what the contracts are, one of the things that you can do is you can go in. Let me see if I can pull this up on the screen over here. can go to their trade tab and open it up, and you can actually see what all the contracts are. So you can say, well, show me the next 3 months. And so like CLV2 being the next month. So if we go over here and we go to /CLV2, and then we can, we can maximize that just to see the exact name, but there's the October contract. So right now, Nadex spreads and binaries are following the October contract, okay? And if we zoom in, what kind of difference does that make? Well, right now we have both of them trading at 95.86. So at this very second, no difference at all. But if we go back and just sort of see, back up, you can see different highs by about 10 cents or so. And if we go in and we just look at, today, okay, then we can see, they're basically trading right on par. So pretty soon here, they're going to separate. They're going to deviate. And that's where, you want to be ready for that. And so you just want to make sure you're watching the right contract, basically. Okay? So anyway, so that's a quick lesson for you on making sure you're always rolling over, making sure you're always looking at the right contract. And once you're done with that, you can say, hey, don't show it again. I got it. Save and continue. If you hit don't show again, it won't show it to you again. If you don't have time to read it, just make sure it's not affecting a contract you're about to trade, because you need to make time to read it. It shouldn't take you more than 30 seconds or whatever. And then log in here and go into, if you want to do the hedge trade, and this is the hedging the underlying market. So there's hedging Nadex on Nadex, there's hedging Nadex against an underlying market. So let's say we wanted to hedge the S&P 500, okay? I'd go over here and I'd pull up the S&P 500. And then what I would do, and we're going to have a tool that we're going to be releasing out to you pretty soon, but I would actually open up a tool and show you how that works. But before I do that, let's go ahead and just, show you the regular way, and then I'll get into the tool once we have access to that for you. But 1412.5, that's basically where the S&P is trading right now. And so I want to find what I can per on here. So if you go over here to 1412.5, then let's see, there's a 1410. That's okay. That's my widest ones there, my daily 400s. The widest one is your master spread. And by the way, if you ever don't have futures charts, you're just getting started, just go to the master spread. Okay, and it's just the widest one. Okay, 800, and you can look at that chart. And that chart will look very similar, almost exact, most of the time. So you can check that out to look at, at mirroring right there, 1412.6 versus 1412.5. So you could use that as a, an underlying chart to look at if you don't have access to underlying charts. I do suggest you get access to them, but it's a good substitute while you're, getting around to getting that done. And then, so we don't like this one. This one's a little bit far off. It's a couple points away. And so we can check out a couple others. Let's see, 1415, that's a couple points in a different direction. And then we can even go down to tighter. There's 1415 and 1410. Okay, so really we're probably going to be looking at the 1415s right here, 300 point wide, depending upon what you want to do. So if you're wanting to go short right now, then what you would do is you would actually sell 5 spreads and you'd buy 1 future. Okay? And why would you do that? Well, because 1 spread, in this case, takes every tick on Nadex on every product, and this is a big benefit to those who are been in futures or haven't been in futures, is you don't have to worry about all the different tick values. Okay, the last increment is always the tick. So when you come back, we'll wrap this trade up. I'll show you exactly how to hedge the S&P 500 using a Nadex spread, and show you how that works for you. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk risk of shorting and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour here with Darrell Martin. And right now we're just doing a quick wrap-up summary on the potential hedge trade that you can do. So you can either buy or sell the S&P 500. So if you want to buy the S&P 500, then you could buy it at 1410, okay, which we'll see. What actual price can we get that at? That should be 1413.6, which is a great hedge. What that does for you is actually, it's very close to the market, so you're only risking 0.6, so you're risking literally less than $50 on an S&P trade, and that gives you a hedge all the way up to, let's see here, my screen's sort of mixing up on me, there we go. That gives you a hedge all the way up to 1450. Okay, so whatever, you have a stop loss of like 28 points for a cost of less than half a point, or less than a point, I guess. So, but yeah, 0.6 to, yeah, so basically about half a point right now risk on the trade. And what you do is real simple, just buy 5. And what that does for you is it makes it to where every spread, or basically it makes it where your US 500 position will be worth $50 a point, just like an S&P E-mini is worth $50 a point. So if it moves from 1413 to 1414, then the spread will make $50. Whereas, you know, if the future moved from 1413 to 1414, like, and you were short the future, then the future would lose $50. So it hedges you. So the spread's making, you know, most of what the underlying market is losing. And really at expiration, your only risk is the difference between where you buy one and you sell the other. Now, if it gets up to 1450, then you need to get out. Obviously, if it starts going that high, you might just want to turn around and go the other direction and put on a different hedge. But, different topic. Anyway, so buy 5, sell the future, you're hedged, $60. Now, you do got to make the $60 back in the future. So where are you going to make that? Well, you're not going to make that back until the spread has stopped losing money. Okay? Well, the spread stops losing money at 1410. So basically at 1409.5 is where you're going to start making money back. Everything below that is uncapped profit, so also known as the open box strategy. Okay, and one of the names we're going to, because call them box spreads, so it's like an open box. Basically, how to trade a net spreads without having any cap on your profit potential. And how long do you have? You have till expiration today, so which is going to be at the close of market at 4:15 Eastern, 3:15 Central. So the S&P you'd buy 5. Same thing on the Dow, you'd buy 5. On the Russell, you would do 10. On the NASDAQ, you'd actually do 20. And that's because it sort of skips some ticks there. So not necessarily my favorite one for the hedges on the NASDAQ there. But definitely the small caps tick right with it. Wall Street 30, the Dow there, ticks right with it. S&P, I love it because it actually ticks tighter. It ticks in 0.1, whereas the minis are ticking in 0.25. So it actually has a tighter tick. It has the best tick ratio of all the spreads. And then you also got your, you got your Forex. All your Forex bull spreads are going to be 1 to 1 mini lot. So on the euro dollar, pound dollar, Aussie dollar. Now, you can't do the hedge with the underlying on the other Forex pairs that aren't /USD because they're not based in dollars, and all the Nadex spreads are in dollars. So you're going to have a currency conversion issue there. And you could do it, but it'd be a little bit off. If you want the exact hedge, then you need to stick with those 3 pairs. Listen to our show from last week. I actually talked about how to hedge Nadex with Nadex. I think that was on Thursday last week. And then you go in here, and then you got the commodities. So the commodities definitely range. I want to say it's 5 for corn, 5 for soybeans, and 10 for oil and natural gas, both. And then gold is 10, silver, I want to say, is 50. And copper, I actually have to look that one up because I don't trade it too much with it because of the way it trades there. But so all of them are really good. You start getting into silver and copper and NASDAQ. Those have a little bit higher ratios. And so sometimes I stay away from those on the hedge trades. They're great for the binaries. They can be okay for the spreads. But the hedge trades, to me, they're too big of a gap there. But all the other ones are awesome on it. And now with all of them, even silver, copper, NASDAQ, great to hedge Nadex on Nadex. So because they're you have the same instrument there, so you could hedge like U.S. Tech 100 against U.S. Tech 100. Again, I talked about that last Thursday on the show. Anyways, I hope you all have a great day. Send me any questions you got. Give me a call tomorrow, and I will see you same time, same channel here on TFNN.com, 12 to 1 Central and 1 to 2 Eastern Time. Stay tuned. We got a great show lineup coming up for you.